Jobless claims look strong, bonds slip, but the timing tells a different story. At first glance, today's weakness seems easy to explain. Continued jobless claims fell to their lowest levels since October of 2024. That's a sign that the labor market remains strong. And a strong labor market usually puts pressure on mortgage rates. So a sell-off would seem like it would make sense, but not so fast. The bond market didn't start selling until about 15 minutes after the data. And the most noticeable weakness didn't show up until nearly an hour later. That makes it hard to argue this was a clean, data-driven reaction. So what's behind the selling? Well, I think it's educated guesswork. Let's take a look. One thing we can see is commodity prices rising at the same time bonds are being sold. But that doesn't automatically mean traders are dumping bonds to buy commodities. Correlation isn't causation, especially in quieter or thinner trading conditions. Zooming out, the move is fairly small in the grand scheme. Rather than reacting to a single data point, this looks more like a continuation of a broader theme. The market is pushing back against attempts for 10-year Treasury yields to fall back into their old lower trading range. Why this matters for mortgage rates. As you know, mortgage rates tend to follow those 10-year Treasury or longer-term Treasury yields. When those yields struggle to move lower, even with data that should be pushing in that direction, it suggests resistance to near-term improvement. The good news, today's selling is modest, not aggressive. There's no sign of panic or sudden shift in outlook. And so our takeaway today is that rates aren't surging higher, but they're also having trouble improving meaningfully right now. Until bonds can convincingly move back into their previous range, mortgage rates are likely to remain pretty steady to slightly pressured rather than dropping quickly. The bottom line for today's early trading, the bond weakness looks more like pushback than a reaction to one jobs report. For mortgage rates, that means some stability, which might be good if you're looking for a house. You know what you're expecting from your rates for at least the short term. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.